CoinDCX, your gateway to crypto. Co-powered by Green Lamb Laminates, Gustakhi Saaf.
Hello and welcome. You're with us on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Holi celebrations on Dalal Street. Market gains 2%. Reliance banks drive the Sensex 1,047 points higher. Nifty ends above 17,250. All sectors in the green. Rupee appreciates more than 40 paise against the dollar, closes below the 76 mark. Analysts expect the Indian currency to strengthen further after the Fed rate hike. US Fed hikes rates for the first time since 2018, promises 6 more this year, making it the fastest rate hike cycle in decades. Paytm plunges over 6% as Macquarie slashes price target by 36%. Brokerage house cuts price to 450 rupees from 700 while retaining an underperform rating. And it's a clash of the titans in the world's wealthiest list. Ambani and Adani battle for top Indian honours. Adani is the biggest wealth gainer in the list. Benchmark indices wrapped up the week with healthy gains, not letting the Fed rate hike spoil the mood. Holi celebrations commenced on Dalal Street. Sensex and Nifty surged nearly 2% today amid gains across most sectors. Sensex surged over 1,000 points today to end above 57,800. Nifty claiming 17,000 again after surging over 300 points. Nifty gained 4% to post the best week in more than a year. 45 out of 50 Nifty stocks gained this week. But the mid-cap and small-cap indices underperformed. Nifty Bank, meanwhile, up 5% for the week to record its biggest weekly gains in 2 months. Except PSUs, all sectoral indices recorded gains, and after days of volatility, there was some respite for investors today as they got richer by 4 lakh crores. HDFC was the top index gainer, rallying 5.6%. JSW Steel, Titan, SBI Life, Reliance, some of the other notable gainers, up between 3 and 5%. Around 5 years after it last raised interest rates, the world's largest and most powerful central bank has decided to raise rates again. The US Fed Reserve has hiked key benchmark interest rate for the first time after 2018 on account of the unprecedented rise in domestic inflation in the US. Indian markets rose on the news as the hike is smaller than expected.
The US central bank started its biggest ever campaign against burgeoning inflation by not only raising interest rates, but also signaling at least 6 more hikes this year. The quarter percentage hike announced by the US Fed is the first since 2018 and reverses the stance the powerful bank held to battle the coronavirus pandemic. For the US, it was a trade-off between reining in a galloping inflation and the threat of an economy slowing down due to the aftershocks of the Ukraine war. Ultimately, price rise emerged as the bigger threat, forcing the US Federal Reserve to tighten its monetary policy with a quarter percentage point increase in interest rates. The US Central Bank also left the field open to 6 more hikes this year.
At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the FOMC raised its policy interest rate by 1/4 percentage point. The economy is very strong, and against the backdrop of an extremely tight labor market and high inflation, the committee anticipates that ongoing increases in the target range for the federal funds rate will be appropriate.
The monthly rate of inflation in the US hit a 40-year high of 7.9% in February, nearly 0.5% more than a month ago. The numbers nearly tripled since March 2021. US Fed is ready to deploy other fiscal weapons against inflation as well. This includes stopping bond purchases, which led to increasing money supply in the market. US currently holds nearly $9 trillion in bonds purchased during the lockdown-induced slowdown. However, inflation is expected to stay above the Fed's comfort level of 2% for the next 2 years. The rate hikes have been welcomed by global markets, which were wary of a higher increase.
There was some talk, certainly a few weeks ago, that it might even be 0.5 percentage point to make a stronger message against inflation. But with everything going on between Russia and Ukraine, it was clear that 25 basis points was the most likely outcome today.
Meanwhile, the war in Ukraine is expected to hit the US economy, with the Fed reducing the 2022 growth rate estimate to 2.8% from the 4% projected in December, weighed down by increase in prices of fuel and commodities. Bureau Report, Business Today TV.
So what's the impact of the Fed rate hike on India and the Indian equity markets? Some sections are expecting a rate hike by the RBI, while others feel that inflation is not as much a threat in emerging markets like India as it is in the developed world. The war in Ukraine has put the focus on crude oil and other commodity prices. If they sustain under $100 a barrel, the RBI may avoid hiking rates and focus on supporting growth. What about stock markets? What does the Fed rate hike mean for Dalal Street? The quarter-point increase is a relief for those fearing a 0.5 percentage point rise. FPIs who've sold equities worth 1,51,741 crore rupees in cash since last October may return, giving domestic institutional investors who bought shares worth 1,67,269 crores in the same period a chance to book profits. Adrian Pan joining us now to decode what the macroeconomic environment is looking like. Adrian, thanks so much for joining us. What do you feel is going to be the game plan when it comes to the RBI? Is inflation as much of a risk here in India, following suit after we've seen central banks around the world address inflation concerns? What do you feel the RBI is likely to do here?
For that, I think the headline CPI, which is mainly the gauge that the RBI looks at, let's break it up into three parts. One is the food, which is about 47% of the overall inflation. There is the second part is more the fuel related, the petrol and the diesel prices and how it impacts the transportation cost. And the third is the stuff like the items that we consume, including the services in terms of healthcare, education, etc. The food is not a problem for India, simply even as the wheat prices globally are on the firmer side, simply because we are well stocked in terms of food. Our Kharif as well as Rabi for the last season have been good. And even though we don't have any met projections at this point in time, we go with the assumption that there is no disruption in terms of food production in India. Indeed, India's stocks are so surplus that India can actually sort of move to exporting wheat to cool down the global wheat prices. So that's not a big worry for India. The worry is the fuel prices. And the commodity prices, which is more a problem in terms of the wholesale price index rather than the consumer price index. Given the weak demand conditions, we don't think that there will be a one-on-one pass-through from the WPI to the CPI. But having said that, compared to the last inflation target that the RBI had provided for FY23, which is 4.5%, they might be forced to move it higher by about 50 to 70 basis points, which will be the new forecast that will come out in April. But even then, we are comfortably within the 6% mark. So I don't see an immediate reason for the RBI to move rates. Indeed, the negative implications of the higher commodity prices and the fuel prices, especially in terms of its implication for the private consumption expenditure, could be larger than the implications of a relatively higher inflation immediately. And that's the reason why the RBI should be holding back on any monetary policy action on the higher side immediately.
Okay. In the last policy, of course, they continued to be fairly accommodative. In Ranil, do you feel that attempt to remain dovish in order to support growth is going to go a long way? Do you see the economy bouncing back?
I think that's a difficult question to answer, and in terms of how the fuel prices is absorbed by the economy becomes relevant. For instance, the government has yet not hiked the fuel prices, and a large portion of the fuel price increases that should have otherwise been passed on to the consumers is being absorbed within the fiscal. Going forward, we need to watch out the overall crude oil prices. It has indeed come down from its peak of about 138, 139, the Brent crude, back to around 100 whereabouts. There are some indications that the talks between Russia and Ukraine might actually yield some results. And the oil inventories in the US suddenly once again have gone up. So all those factors are feeding into the global fuel prices, the crude oil prices. And to that extent, the fiscal implication of that, whether the government is willing to give a excise duty cut or is absorbing in the fiscal in terms of a higher fuel subsidy, all those become relevant in terms of how much it is passed on to the end user consumer, and therefore the negative implications of that on growth. But having said that, I think in terms of the overall production process, and if logistics costs were to go higher, there could be a hit to the real economy to the extent of about 30 to 50 basis points.
All right, Indranil, thanks so much for joining us. Great speaking with you and getting a sense of how things stand currently. There could be more heartburn for those still invested in Paytm. The stock has been further downgraded by Macquarie, which first raised concerns about its IPO valuations. Watch this report to see what Macquarie thinks the right price is.
While demonetization turned Paytm into a savior, the shocking fate of India's largest ever IPO has investors begging for mercy. Paytm has been on a slide since its debut on the bourses, losing around 72% of its market cap. To add to Paytm's woes, Macquarie, one of the first to warn investors about Paytm's valuation, has slashed its target for the stock by a further 35% to 450 rupees. The first target Macquarie issued was 1200 rupees when the IPO issue price of 2150 rupees was announced. 2 months later, it was slashed to 900 and to 700 rupees last month. Paytm ended the week at 6.28% down, even as the Sensex rose over 1,000 points. The global financial major cited regulatory headwinds, including a falling probability of getting a banking license for the cut in target price. The brokerage firm's valuation is premised on the valuation of global fintech firms, which have corrected sharply. Macquarie believes that Paytm will face more headwinds because of the Reserve Bank of India's regulations on digital payments, buy now, pay later, and stricter Know Your Customer or KYC norms. Earlier this week, the RBI had barred Paytm Payments Bank from onboarding new customers. The central bank has issues with Paytm's protocols relating to KYC, data privacy, data storage. The RBI has also directed the company to conduct a comprehensive system audit of its IT systems. If you think as an investor you're bearing the brunt of the 72% slump in the Paytm stock, think twice. Not only is Paytm founder Vijay Shekhar Sharma no longer a billionaire, but Warren Buffett's maiden investment in India has gone all wrong. A highly promising fintech has turned into a loss-making bet for many. Bureau Report, Business Today Television.
Several global factors have impacted IPO plans of Indian startups and companies. The ongoing Russia-Ukraine war, tightening of monetary policy by the US Fed Reserve, looming threat of another COVID wave, and share market volatility have all contributed to the delay of scheduled IPOs. Post the delay in the LIC IPO, several other companies which were waiting for that to get out of the way are reportedly delaying their own plans. Here are some of the companies that we're talking about. Indian payment service provider MobiKwik will not be heading for IPO in the next few months. Go First, the Nusli Wadia Group, had temporarily put on hold its 3,600 crore rupee IPO plan amid the raging Omicron wave and travel restrictions. Delivery, the logistics company, has pushed its approximately $1 billion IPO to the next fiscal year starting in April. Oyo is yet to get a green signal from market regulator SEBI for its planned IPO of $1.2 billion. The race for Reliance Shipyard has been won by a consortium led by Nikhil Merchant. The news of the bid had first been broken by Business Today TV. Nearly 95% of the lenders reportedly voted in favor of the consortium's resolution plan. The voting ended late evening today. The consortium of two companies, Hazel Mercantile and Swan Energy, had bid around 2,700 crore rupees for the bankrupt shipyard, previously owned by a company chaired by Anil Ambani. Ambani had, in fact, made a last-minute offer to wrest back control of the shipyard, which has been rejected by lenders. The Russia-Ukraine war is spelling trouble for India. Rising inflation due to the war has led to Moody's lowering its forecast for India's GDP growth to 9.1% from 9.5%. The credit ratings major has also cut GDP forecast for 2023 to 5.4%. According to Moody's, high fuel and fertilizer costs will weigh on government finances, potentially limiting its planned capital spending. JP Morgan too downgraded India to underweight from neutral, saying its GDP growth may disappoint. According to the brokerage firm, high inflation is hurting both households and businesses. Let's take a very quick break. Back with more on the other side.
Rahul Kanwal,
23 years of experience.
5 conflicts covered, unmatched time in war zone.
The first embedded operation in the history of Indian television journalism.
Gaurav Sawant, 28 years of reporting, 8 conflicts covered, unmatched hours in conflict areas.
Actual firing is taking place, the grads are firing.
Shivarur, 19 years of reporting, 5 conflicts covered, unmatched view of international crossfires.
And the attack guns are firing away.
Geeta Mohan, 18 years of reporting, 3 conflicts covered. When the world is at war, there is no compromise on India today.
Russia has made an offer which India just can't refuse. They've offered crude oil to India at discounted rates, which will help reduce fuel prices in India. But news of this deal reached the White House as well.
India could take up the Russian offer of discounted crude oil. What would be your message to India or any other country?
Our message to any country continues to be that obviously abide by the sanctions, but that we have put in place and recommended. I don't believe this would be violating that.
While the US agreed that India will not be flouting any of its sanctions by entering into a deal with Russia, but Jen Psaki's next statement made it clear how India's dealings with Russia will be viewed by the US.
Also think about where you want to stand when the history books are written in this moment in time. And support for the Russian leadership is support for an invasion that obviously is having a devastating impact.
US President Joe Biden announced a complete ban on Russian oil imports by the US on the 8th of March.
Today, I'm announcing the United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy.
Ever since the US made this announcement, there was a widespread fear in India that fuel prices would increase considerably. Due to fear of a fuel price hike amid the Ukraine-Russia crisis and the mustard harvest season, there was a huge rush of farmers stocking up diesel and petrol outside fuel pumps in Haryana.
जो रूस और यूक्रेन का युद्ध चल रहा है संभावित
Welcome back. Stock markets seem to be getting into a festive mood ahead of Holi, with a broad-based green rally being witnessed despite pressures. Watch Sakshi Batra speak to Siddharth Sudani, Head Equity Products and Advisory Anand Rathi, to find out his key Holi stock picks, with which one could create a colourful and vibrant portfolio.
So if I had to ask you, for all our viewers who are willing to make an investment portfolio as of today, when the markets are recovering from the recent losses that we have seen and the bulls are trying to make a comeback yet again, what would be your three top Holi picks, Holi 2022 picks, along with target prices and the duration that you would recommend them from, so that our investors can definitely add them to their portfolio and enjoy the benefits of Holi?
Certainly, Sakshi. If I name I would like to pick up first stock would be a private bank. And amongst the private banking space, I would like to pick up Axis Bank with a target of 860. Axis looks quite interesting. Looking at the results, profitability was more than 2 times, 200% up. Loan growth was around 17%. Asset quality has been improving. Quarter on quarter, margins at 3.39%. So it's a strong asset quality mix. I think Axis Bank is out of the woods and we may see a great performance. 860 is what the target is. The next company which I would like to pick it up from here on would be Dixon Technology, Atmanirbhar stock. I believe Dixon Technology looks very interesting to me. Contract manufacturer. Global aspirations have been rising with Dixon. They would like to be a global LED manufacturer. Added to that, the joint venture with Bharti will bring in a lot of colors and revenue for them. 1400 to 1600 odd crores revenue is expected. Refrigerators is one segment they've entered, and 12% of the refrigerators be manufactured by Dixon. Mobile manufacturing would be a very big chunk for them. Of late, they did a contract with Acer for 5 lakh laptops. So contract manufacturer, Atmanirbhar company, Dixon Technology with a target of 5900 is what our second stock. And the third company, again from a consumption arena, and heat is all around on the streets and summers are coming up. I would like to beat the heat. I would like to pick up Havells. Havells looks very interesting to me with a target of 1362 because all the segments are very good. They are market leaders. Balance sheet is good. Return ratios are fabulous, 20% and above. Strong retail distribution network. Havells with a target of 1362.
A clash of the titans in the world's wealthiest list. Mukesh Ambani and Gautam Adani battle for top Indian honours. Adani is the biggest wealth gainer in the list. Take a look on our special report.
Global Rich List 2022 is out, and Reliance Industries chairman Mukesh Ambani took home the richest man in India and Asia title with a whopping 24% jump in his wealth. Ambani became the only Indian to feature in the top 10 global rich list with a net worth of $103 billion. Close on his heels is the Adani Group chairman Gautam Adani, who was competing with Ambani for the richest man title earlier this year. Adani added $49 billion to his wealth last year, more than the net addition of wealth by the top 3 global billionaires Elon Musk, Jeff Bezos and Bernard Adani was named the richest energy entrepreneur. From dropping out of college and trying out his luck in various failed ventures to establishing an empire spanning ports, airports, mines, green energy and more, Gautam Adani has come a long way. According to Hurun's list, Gautam Adani's wealth registered a 153% year-on-year change, while Asia's richest man, Mukesh Ambani's wealth, only increased by 24% in 2021. But Ambani and Adani have one thing in common. Both have built business based on fossil fuel. Reliance runs the world's biggest refining complex at Jamnagar in Gujarat, while Adani is India's largest private sector operator of coal-fired thermal stations and the country's largest coal trader. The Hurun Global Rich List includes 7 Indians in the top 100. Cyrus Poonawalla tops the list of Indians after Ambani and Adani. He is followed closely by Lakshmi Mittal, ace investor Radhakishan Damani and SP Hinduja and family. Other notable addition in the rich list is Falguni Nair, founder of Nykaa, who made it to the list of the wealthiest with assets $7.6 billion. Bureau Report, Business Today TV.
Now let's listen in to Uday Kotak, MD and CEO at Kotak Mahindra Bank, talking about state of the economy and women empowerment.
How many women work for the bank that you founded and have led so successfully into a marquee name?
We have got a total workforce which is now more than 80,000 people in totality. And our current ratio is 26%. And we aspire to take it to a third in the next 3 years.
Wow, a round of applause for that. And how does that compare with peers in the banking space?
I think a lot of them are in the early 20s. Some of them are in the late teens. But I think we are pretty much at a reasonable ratio, but there is clearly room to improve. And again, there, Siddharth, it's about stereotypes. The belief is that there are certain kinds of jobs in a bank which a woman can't do.
This was the PSU bank stereotype.
PSU banks and even in private sector banks. And let me give you one example.
Keep the mic closer.
Let me give you one example. The example of collections. So one of the very important aspects which a bank has to do is to collect the money it has lent. So the stereotype is, oh, for a collections job, it has to be a male. So we have actually now found that women not only are effective in the job, in fact, they are better. And we have also tried it in rural and semi-urban India, and it is turning out to be very effective. For doing a job which was a male stereotype job of collections.
So collection is not about muscle, it's all about mind and presence.
Absolutely.
Okay, what about borrowing? Because I remember talking to bankers and also on the field, especially in the small finance sector, and a lot of them say women make good borrowers. They return the money on time. Is that correct?
I think there are a number of other areas where women actually score better. One is commitment to repay a loan.
Okay.
And that is clearly superior. Second is stickiness in the job. The attrition ratio of women is much lower than men, at least at Kotak.
Okay.
And it's something which we find quite fascinating. And as long as we can find innovative ways of women growing, for example, flexibility on work hours. And one of the things which COVID has dramatically made it possible is flexibility on work hours. And if we expand that scope and make it even flexi times, at 2 or 3 times a week to come to work and balance work from home, I think it's going to dramatically increase the participation of women in the workforce.
When it comes to making India Atmanirbhar, one of the torchbearers is Dixon Technologies. Dixon is the biggest manufacturer of LED TVs in India, producing for the likes of Samsung and Panasonic. Udayan Mukherjee was in conversation with Sunil Vachani of Dixon Technologies. Here's an excerpt.
Do you think we have the capability of creating a successful, viable semiconductor system in India where we are not overly reliant on imports?
Let's not forget, we also have one of the lowest corporate tax rates for manufacturing companies. So combine that with the incentive of PLI, combine that with the new semiconductor policy, also combine that with the state government incentives, and you would see that we have one of the most attractive packages as compared to any country in the world.
Watch the full interview tomorrow at 10:30 p.m. on India Today and our website plus YouTube. And that's all from us on the show today. Thanks so much for watching. Wishing you all a very happy Holi.